Alright, what's up traders, it's Nati from DesireToTRADE. Welcome. I just want to make sure that everything's working fine before I start, so I'm just going to share the link on social media. But what I'm going to do is I'm going to do a market review, so if you're live, come check this out. It's going to be a nice market review of the Forex market. So I'm going to post the link. Cool. Alright. I just want to make sure that everything's working. This sound's working fine and everything. Sometimes it takes a little bit of time. I just want to make sure that everything's working. This sound's working fine and everything. Sometimes it takes a little bit of time. Make sure that everything's working. This sounds working fine and everything. Okay, what's up traders? It's Nati from DesireToTRADE. I hope everything's going fine. I had the problem with this sound. Okay, so everything seems to be working fine, which means I'm going to start right now and I'll do a market review of the Forex market. Okay, wonderful. Good. So what I want to do in this video live is I want to go through a couple of currency pairs, just to show you exactly what's happening and what I'm looking for, just so it can be beneficial for you, and at the same time it's easy for me to really review like what I'm looking for and everything. So we'll start with the Euro USD. This is like the basic stuff. So as you can see, the big thing on this pair is really the range that we had recently. Now this is, I would say, the big range that we are having right now, and as you can see, price almost break out of that range last week and even 2 weeks ago. So we had a consolidation here. Now this was a perfect trade. We've had, I'm just gonna go in the lower time frame. We had a breakdown right at this point. See, so we had this nice range and then breakdown here. Then price right now came back within, I would say, within the range a little bit. So, but the basic thing I'm looking for right now, since we had this breakdown, is really I'm looking for a move downward, right? Because we had this represents weakness. So hopefully we can have some evidence here for a move downward. And I'm using the Bollinger Band because the Bollinger Band works great to show you that usually, but there's different ways of doing that for sure. So that's basically the thing. Now, if we have a breakdown on that pair, I mean, if we have a move down after this retracement, the most likely thing would probably be a move all the way down to the next support or resistance. So either that level here or that level right there. So probably two ways of seeing it. But right now I wouldn't be looking to buy. I would really be looking to sell on that retracement for a move down. Now let's look at GBPUSD. I simply drew a trend line a couple of days ago, and that's really what's happening. Like, as you can see, it's really a big downtrend, meaning you would not be looking to buy at any point, and in that case you're really looking to sell. So what we had so far is kind of this. I'm just gonna, it's gonna be easier with that. So as you can see, we're really having like a move downward. So what you want to be looking to do is probably to sell at this trend line and not buy at this one, but really sell at this one. Now, as you can see right now, we're at this trend line, really like at that point. So you might want to go on lower time frame to see if you have some evidence to sell. At that point, that's usually what I would like to do. I would like to go on lower time frame, see if I have any evidence. Here I don't have anything yet, But if you see that you have some bearish evidence, then you can start looking to sell. And again, I'm not making any recommendation. I'm not saying exactly what you have to do, but it's up to you to decide if you want to do it, as always. That's the basic thing. So really, you're looking right now for trend lines. That's the easiest way to trade that pair. You're not looking to buy, unless you want to trade a breakout on that pair, on that trend line. But this is not really what's likely to happen at that point. Next. If you guys have any questions, just type them in the chat box. I think there's a chat somewhere below this video or something, so you can type everything there, and I'll make sure to reply. Now, the daily chart. This is the AUDUSD. Yeah. So I drew a couple of support and resistance on that pair, but as you can see, we had this line which formed the top here, consolidation here, but we just broke above that line, meaning that the fact that we broke above that line is a possible sign that price will go probably up to the high here. This is not looking very good, but it's probably a sign that price will go all the way to the top because of the fact that we broke this resistance and the fact that this one is the main one near that point. Now on that pair, it's really, again, we had some sideways movement. Now we broke above, so we're really looking possibly to buy a little bit more, even though we could, if we go on higher time frame, like the weekly chart. This is really sideways. Okay, so this is really sideways. So you could be looking to either sell at this point if you have some evidence, or otherwise you're looking to buy here on a pullback. So if you have a pullback, like a small move in the opposite direction, I don't know why that's not working. But if you have a pullback, like a small move in one direction, then you can be looking. Then you can be looking to buy afterward to move it to the top. So that could be probably the best thing to do. Now, of course, one way to trade this would have been to trade the breakout, and I kind of missed the breakout. But I'm just going to focus on that for a moment. See, we had this top right here. Now, when you see a top and a resistance like this, you're looking for possibly a breakout above that point. Now, the way you trade the breakout is, I usually go on small time frame. I would go see, let's say on the 4-hour chart. And 4-hour, we had some resistance here. Now, this is not the ideal case. Let's see, we go on the 1-hour chart. See, here we have some resistance, which means I'm not going to take any trade here. I want to have some big move upward, meaning a big candle upward, and then I would be looking to trade the breakout. So the way I would have done it is I would have looked at a big candlestick breaking out of that range. See, the range is really at this level now. It's really this level. Now we had this candlestick breaking out of the range, and this is pretty strong, right? A big bullish candlestick. Now, instead of just entering on that candlestick and not knowing whether it's going to work, what I would have done is I would have looked at the small pullback we had afterward. So as soon as I have a candlestick that doesn't make a new high, like this one's making a new high, this one's making a new high, there's a high here, and this one's not making a new high. So what I'll be looking to do is I will be looking to buy at the high of this candlestick when we have something that doesn't make a new high. So at this candlestick, no new high, we buy at the high or on a retracement, and this would have happened around here. So we would have bought here, stop loss would probably be below this candlestick here, and then we could look to trade the breakout simply. So that's a simple way to trade the breakout. That's not exactly what I was expecting to show you now, but it's just to show you that there's ways to trade breakout other than the usual way. So usual way is you buy when it breaks out, when you see a candlestick breaking out, or you just put an entry above. But I think, in my opinion, this is a really poor way to do things. You really want to focus on having more reliability, and when you enter above a high like this, you have more reliability. So that's the main point of this. You don't want to just buy as soon, because like a lot of traders would have simply put a buy order here, right? Because it breaks outside the high, and it's just above. But this is not working in my case. The way I want to do this is I want to make sure that we have a new candlestick that doesn't make a new high, and I buy above the most recent high. So in that case, that would have been probably here. So we wouldn't have been buying at that point. That's the basic thing behind this. So I'm just gonna do a last pair because I have to work on something else afterward. But this is gonna be the last pair I do. Let's see, New Zealand dollar. Okay. So again, it's just the same as the last one, AUDUSD. Basically, we had a range like this, and here. Maybe. Yeah, it doesn't really matter, but I'll say the range is like around here. Now we had a breakout again on that pair. Same thing, you could have traded the breakout as I just showed you. Or the other way would probably have been to wait. Now it's really to wait for a retrace, pullback. Meaning if you have a small move that way on the daily chart, then you can be looking to potentially buy after that. Now you always have to look at other zones when you're going to trade, like breakouts or something like that. Like whatever you trade, you want to look at the next zone to make sure that you don't interfere with those zones. So the next zone on that pair will probably be this one here. So if you're gonna buy, let's say at this point, you want to make sure that you get out, or partially get out at least, before the next zone. So before this zone right here. So like really that point. Because the thing is, a lot of people will buy just a breakout and they will like put the take profit like here. But this is not gonna work. They just want to have a high reward to risk. But this is really unlikely to work because of the fact that it's just too high. It doesn't respect the structure of the market. So you want to make sure that you respect always the structure of the market. You want to make sure that you take profit where you're supposed to take them, and you put your stop loss always where you're supposed to take it. I know a lot of people have trouble to put their stop loss at the right place, but you want to make sure that you put it at the right place always. You want to make sure that you take your profit where you're supposed to take them, and put your stop loss where you're supposed to take it. So that's going to be it, guys, for this quick review. If you want to subscribe to the channel, subscribe. I love it. I love to have new people subscribing. It's cool to bring new videos. So I'm going to keep putting more videos out there pretty often. So if you liked it, like the video, subscribe, and I'll see you soon. Also, check out DesireToTRADE.com. I always forget. But check out DesireToTRADE.com. I have a couple of podcasts there, a couple of articles. Check this out. DesireToTRADE.com. Subscribe, and I'll see you soon.